Most people insure their car. Most people insure their phone. But they don't insure the thing that pays for everything, the ability to earn an income. Today, I'm not selling insurance. I'm explaining the problem most families don't think about and what happens if it's ignored. Before we start, this is general information only, not personal advice, not a recommendation. This video is about understanding risk, not buying products. Most Australians believe this. If something bad happens, I will figure it out. But there is the problem. Life doesn't pause while you figure it out. Bills keep coming. Mortgages don't stop. Kids still need food and rent is still due. The real risk isn't dying, the real risk is losing income suddenly or permanently. That's what the problem personal insurance exists to address. Let's talk about outcomes, not fear. If someone dies unexpectedly, the income stops, debt remains, family lifestyle changes. And if someone can't work long term, savings get used first, super is drained early, and financial stress become long term. If someone gets sick or injured, time off work is unpaid. Recovery costs money. Pressure builds quickly. This isn't rare, it's just uncomfortable to think about. Personal insurance isn't about predicting bad events. It's about answering one question. If income stopped, what would happen next? Different risks need different types of cover. That's why there are four main types. Let's go through them one by one simply. The first one is death insurance. It pays a lump sum when someone passes away. It's usually used to support family members, pay off debt, replace lost income. It doesn't benefit the person who passes away, it supports the people who are left behind, and that is the purpose. Whereas TPD stands for Total and Permanent Disability. It pays a lump sum if someone is unlikely or unable to ever work again due to illness or injury. This is not short term, it's about permanent loss of earning ability. People often confuse TPD with income protection. They are not the same. TPD is about never returning to work, whereas income protection covers your ability to earn income. If you can't work due to sickness or injury, it can replace part of your income for a set period of time. This could be months or several years. Income protection doesn't pay medical bills, it replaces income so life can keep going. This is often the most likely risk working people face. Trauma insurance pays a lump sum after a serious medical event. Events like cancer, heart attack, stroke. It pays while you're alive. It's often used for time off work, medical gaps, lifestyle adjustments, recovery, and support. It sits between health and income. Each insurance type solves a different problem. Death supports spouse and kids. TPD, permanent loss of work due to disability. Income protection, loss of income due to sickness or injury. And trauma for major health shocks. They don't replace each other, they work together to cover different types of risks. Understanding this is more important than buying anything. Now, back to the problem from the start. The biggest financial risk is in markets. It's not interest rates, it's not inflation, it's losing the ability to earn before the plan is finished. Personal insurance doesn't make life safer. It makes the financial impact smaller when life doesn't go to plan. That's the real purpose of personal insurance. Personal insurance is not about fear, it's about time, income, and financial continuity. It answers one simple question. If this didn't go to plan, what happens next? Understanding the answer comes before any decision. Now, let me ask you a few questions. If you couldn't work for 6 months, what would actually happen? How long would your savings really last? If income stopped tomorrow, who would carry the financial load? And if something permanent happened, would the plan still work? These aren't easy questions, but they are important ones. If this explanation helped you understand what personal insurance is really about, like the video, subscribe for more simple explanations.